trillionaires, and welcome back to another episode of attempting to turn 1k to 100k over time. So last week, and as per usual, I haven't bought anything yet. Well, please don't hate me for this because like I mentioned before, I'm looking to time the market because my account size is relatively small, and I'm looking for growth names. So I'm trying to time the market sentiment and especially catch the reversals, the bigger ones especially. So, which is why last week I haven't bought anything yet. I was really close to buying Novo Nordisk. I already had a buy order ready, but it didn't got filled, right? Because I usually place like good for end of day orders. But last week was an interesting one because I was expecting the market to be bullish based on whatever was done the week prior, right? How Jerome Powell set a very dovish tone, and how we're gonna see more liquidity flowing to the market, especially since we're not cutting really into a recession. But last week was an interesting one. He had some comments which I will now share. So what happened last week essentially? So number one, Powell's comments midweek. So he did say that interest rate cut is not without its risk. Potential upward pressure on inflation and tariffs impact still poses a risk versus the short-term unemployment weakness, which is the reason why they are looking to cut interest rates. So essentially, I have a video uploaded I think a couple of days ago about my views on his pivot, right, and how I'm positioned forward going ahead. So another thing is he mentioned that US financial equity assets are highly valued, which is a bit unusual, right, because the Fed historically and traditionally only takes into account unemployment rate and inflation. So for him to comment on US equity asset value, right, it's a bit odd and out of the blue. So these are my takes. So it may not make sense to cut interest rates so quickly when the economy is still fairly resilient and unemployment rate is still fairly low. So what's happened so far is just like you're seeing some short-term weakness in the job numbers, right? You're seeing like fewer additions to the market, but essentially unemployment rate is still very, very low. But this coming week, we may see a change in that number, so which I will share further later. And so markets have essentially priced rate cuts to perfection. So as you can see last week when he made these comments, the market started to feel some form of jittery, which is why you see there is some form of like sort of like a weak bearish tone happening in the market now, and there was a slight pullback. But that said, right, the valuation of the stock markets are still very, very high compared to the past few years. So my take is, this is my take, essentially my take was uploaded in my previous video, but essentially is that I'm not that super bullish anymore. I want to see bigger pullbacks before I enter the market. So if you are holding a portfolio that's steady, you should continue holding on. Do not sell yet because high can go higher. But if you are like me without any holdings right now, I think take your time to buy. Do not aggressively buy in. If I really want to buy, I would just go in with like nibbles instead of like a one big all-in kind of allocation kind of play, right? Because at the same time, I don't want to miss the upside run if interest rates do indeed get cut and sentiments improve. But then again, valuations are too high for my liking. So this may affect my emotional state and management of my portfolio if I'm go aggressive now, because I don't really feel that bullish anymore. And as mentioned in my previous video, as an investor, we should always take into account the changing market dynamics and environment and position our risk management accordingly, right? Number two, the tariff news are back in the headlines, right? So the Trump administration is considering imposing tariffs on foreign electronic devices based on the number of chips in each one. So this is just a passing comment for now. There's nothing been fixated yet. So that's just something to keep an eye out for. Number two, the EU plans to roll out 25 to 50% tariffs on Chinese steel and related products. Well, this is probably pressured by the US to do so, right? Especially, I think a couple of weeks before, Trump said that he wanted the EU to impose tariffs on China to put pressure on Russia to end the Ukraine war. So this could be part of that whole plan. Number three, the United States will impose 100% tariffs on imported branded drugs, 25% tariffs on imports of all heavy-duty trucks, and 50% tariffs on kitchen cabinets. So my take on this is probably going to inject some form of uncertainties back into the market, but its impact and significance will likely be far less than that of what happened earlier this year in April, because I think the market has already understood how to play along in Trump's environment, right? There's a lot of when out of the deal, right? There's gonna be a lot of bluffs here and there, uncertainty. But I think at the end of the day, if you really impose a lot of tariffs on your allies, your consumers are gonna be the one that's gonna bite the bullet too in the form of inflation, right? So unless you see something extreme again, I think for now, only trust anything that's fixated and directly impacted your convicted bet and company's business itself. So, for example, if you are invested in Ford, right, or Tesla, and you see that there's going to be so I think Ford will be a better example here. You're going to impose an import of all heavy-duty trucks of 50%, 25%, and it'll impact your business in some manner. Or if you're like a logistics business and you see this huge impact on all heavy-duty trucks, it probably affects your margins. So, which would also make sense to impact your company's future earnings potential, and we probably see a valuation cut as well. So, unless you have invested in business that are directly impacted by the tariffs, right? I think any big sell down is an opportunity for you to maybe add on to your convicted bets and enter the company that you always wanted to, but can't really do so because of valuations, like me, right? So probably will not directly impact growth companies as they're not directly operating in these business segments. But overall, there could be some spillover to the business and the environment, some spillover negativity to the business environment, but shouldn't be that bad, right? So I think if this continues, right, this tariff news continues, it's going to take over the headlines again. It probably, as I mentioned, it's going to lead to some uncertainty in the market, lead to some slight pullbacks, not as to the extremes of what happened in April. It could be a good opportunity for you to add to the market. So this is the news that I've been waiting for, actually, to add into my holdings. Number 3, not really a crypto channel, but just a headline, right? It's crypto sell-offs. So cryptocurrency shed roughly US $300 billion in value this week as a wave of leveraged bets unraveled. So I think this is fairly normal if you're in the crypto scene, you've been keeping up. This is a form of like a normal rebalancing, right? It always happens. So I think this is healthier for continual bullish uptrend of crypto, right? You always get this like just this liquidity events where just all your stops get hit at one go and take out all your leverage bets. So I think this is something is good. It's sort of like cleansing. So if you're a crypto guy, I think this is an opportunity for you to add further, especially if you believe in the whole US rate cuts going to happen and you're going to see more inflation going ahead. So this drives the narrative to buy more Bitcoin and gold, which is why you're seeing gold as having its day again. And I think with Bitcoin being lagging now in terms of the share price, all this leverage sell-off, right, I think it's a good chance to add. Number 4, TikTok's sale. So under the deal, TikTok US operations will be sold to a group likely to include Oracle, Silver Lake Management, which you wouldn't know is owned by Michael Dell as well, who is the founder of Dell, Abu Dhabi-based MGX, and existing American investors. So overall, this group is likely to own 80% of the business, while 20% remains with ByteDance. And also, Oracle will serve as TikTok's main security partner. And TikTok's Chinese parent company will likely get about half of the profits from the platform's US operations after it sells majority ownership to American investors as part of a deal orchestrated by Donald Trump, right? So I think obviously TikTok is a dominant social media player in the US now, right? I think as you're seeing like all kids out there using TikTok, like even all over in Singapore, when I'm in the gym, I'm looking at the elderly using TikTok while exercising. So, and Oracle is entering this game, social media game, directly. And I think buying Oracle is a proxy of owning TikTok because you can't directly buy the ByteDance, right? Or TikTok. So I think Oracle is the closest proxy, and you could see inflows to Oracle shares. So Oracle stock price, if you look at its chart, has ran up crazily, but I think there is more potential for it to grow further if valuations make sense. But I haven't looked that deep into it, but there's a lot of bullish case and bullish narrative for Oracle right now. And then looking at seasonality, September is almost ending, and we have seen a positive September so far. October historically is likely to be bullish, but not as bullish as other months. So it could be a muted month, but let's see. This whole year has been quite special, so don't expect things to just remain as per how it is in the past, right? Looking at the fear and greed, we have entered neutral territory again. But so far, I think it still feels pretty bullish to me, considering all the tariffs headlines and things like that. We're only in the neutral territory. So I I think my stance is similar to this going to next week, more or less neutral. Market momentum, we're still very far off the 125-day moving average. So if markets does indeed pull back, right, there's a chance that it could pull back quite sharply. Stock price strength, well, when agreed, a lot of stock right near its 52 weeks high. Put and call options, we're seeing more puts being picked up, right? I think because of the comments last week by Powell that people are starting to hedge their bets again, but we're still in a very bullish territory. And if we go back spike higher, right, there is a chance that this hedging activities can continue. Market volatility, the VIX is very low. Nothing out of the blue for now, but it's very hard to predict these kind of events that will spike the VIX. So let's just use this as a proxy. We're still at very low territory. The longer we are in this range, the higher potential that it could spike out of some random event. So let's just keep a lookout for that. So the US total assets held by all federal banks. So we're not seeing like an easing environment yet. We're not seeing them starting to expand their holdings. So for now, like I mentioned in the previous video, we want to be in an environment where interest rates are low, and you're seeing US assets, total assets held by the Federal Reserve go up. So we're not seeing the up part of this yet. So the overall environment should be slightly bullish going forward, unless the Fed U-turns when there's bad data. So as you can see, right, the US Treasury yields versus the Fed fund rate. So if the Fed is so dovish, right? Yeah, dovish, and that's like we're gonna get 3 rate cuts is what the market expects right now in price to perfection. Why is interest rate not hitting right there, but instead it's heading up, right? So this is something to wonder. Why are yields not aggressively falling, right? Yeah, like I mentioned, we are pricing rate cuts to perfection. So anything that derails this probably will lead to some market weakness and bearishness, because right now everybody's expecting 3 rate cuts. But like I mentioned before, it may not make sense to just cut when the economy is fairly resilient and inflation is still sticky and still some distance away from the Federal Reserve's long-term target of 2%. So let's see how it goes. If any inflation related data that supports inflation is sticky, and you see the short-term job numbers are not that bad, right? So your unemployment claims, things like that, unemployment rate is still fairly resilient. Because cities start to taper off, and then that's where you see your interest rate expectations and what the Powell's comments start to be more hawkish, and then that's where you see your market pullback will likely happen. Ample money supply doesn't change very often, but it's still going up. So the money printer is still printing. Overall, this trend should continue to go up because it makes sense, right? As your economy grows, there is likely to be more money supply needed. Valuations, so haven't changed much from last week. Still very, very high. Actually, the PE ratios is near all-time highs and past the COVID highs, right? S&P price ratio as well, very high. So PE ratio is still fairly okay, right? I think I wouldn't be that worried until it picks, at least it reaches this level here. So until for now, it's still okay. There should be small run room for the market, but like I mentioned, just don't go all in, right? You need events where it pulls back strongly, where then you place all your strong bets. Looking at COT positioning, to me it looks fairly neutral, right? Because you're seeing your retail small speculators position start to be less bullish than before, and you're seeing the gap between your commercials and large speculators, non-commercials, start to close. So whenever it closes, this is an opportunity for a trend reversal. So it looks neutral and slightly weak to me, but let's see. This is not 100%, right? So if the gap closes, right, that's where you could see a potential reversal. Nasdaq, same situation, but looks more neutral to me because the gap has more or less already doesn't look that extreme, right? Dow Jones, starting to show weakness. Your small speculators are starting to reduce their longs, and the gap is about to cross and potentially it may go down further. And that's where you see potential weakness in the market. Russell 2000, same thing as well. Your gap is already starting to close. Your positioning, but your small speculators are not that bearish yet. So I think if you want to go longs, small caps and growth companies are still, I feel, the one with the most better risk reward ratios, right? Instead of just buying the big names now where valuations are extremes. US dollar looks like it's gonna show some strength. Like you look at stock prices, the prices already went up. If the gap widens, right, these small speculators start to go up, you see the USD starts to gain strength. So let's look at the economic calendar for the week ahead and what's my plans. So if you look at the calendar, I think what's most important is the US economic data, especially employment related ones. So Tuesday we have the JOLTS, Wednesday non-farm ADP and ISM manufacturing data, Thursday unemployment claims, Friday unemployment rate and non-farm employment change and ISM services PMI. So what you want to see is, although may not be the best, right? You want to see job numbers show weakness, right? And you want to see your manufacturing data, your services, or ISM related data outperform. So this means that there is a reason for the Fed to stick on its path, and then we're not cutting into a recession. So this is generally bullish, historically bullish, and this supports the case for rate cuts. So that's the optimal situation we want to see, right? Tariff announcement. So I expect this to be spacing out of the blue, right? We also want to see some clarity on the chip-related tariff that Trump talked about last week, and also we want to see how would China react to the EU's steel tariff based on them. But as I mentioned before, this is unlikely to move the needle much because the markets have already moved on from all these surprises, right? And all these tariffs news, geopolitical news dies fast. So I think what would be more important is US economic data for now, right? Earnings. So next week's pretty quiet earnings wise, right? Except Nike, which is a familiar retail name. So if I know Nike stock has also fallen off quite heavily over the past few years. So if this earnings show any potential, it may be a turnaround case, right? Especially since they have a new CEO in charge, and I think he's been in the helm for more than 6 months now. So let's see what happens. Quick takes. So we are entering into a seasonally bullish October, right? But not that bullish, right? So any dips and uncertainty next week, I believe, is both the end. But please go small because there is some form of fundamental uncertainty in the market, right? In the terms of inflationary pressures, and also your Powell just injected some uncertainty by saying that there's going to be risk in rate cuts, right? And valuation is at extreme levels too. So I expect next week we have some volatility around job number related data, but I remain neutral until the data tell me otherwise. So if there's any opportunity, I may add to some of the names I'm sharing next. So let's see what happens. So let's look at what happened on the companies that I recommended last week, right? So these are all 100% technically based. Number one, which is number one, Root. So it didn't manage to hold the support level, didn't manage to hold, right? So it just broke downwards. But if it manages to break back up, hold, I probably may enter again. Or if it comes back here and shows strength, I may buy at the support level. But let's see. Figma, bad. That support level didn't hold as well, right? It just broke back down. So for now, I don't think I'll touch Figma unless it shows that price could hold above this level. But as of now, it doesn't look like it's indicating that. Novo Nordisk, bad, right? Might be related to the drugs related tariff that Trump was talking about. So prices did indeed popped up, hit the resistance level that I drew, and then pull back strongly. So for now, we have to get some clarity on what Trump exactly wants to do with the drugs related tariff, right? But technicals wise, if prices manage to hold here, it may be a decent support level to hold for it to bounce back to the $62 level. So it's more like a swing trade kind of situation. But if you believe in the long-term prospects of the company, I think all this short-term tariff-related scare isn't that important, right? Unless it's fixated and 100% established. But let's take a technical trading kind of approach for now for this Novo Nordisk. UNH, nothing really happened with the company last week. prices just float around. So I think it's still a pretty good chance for someone to enter the good long-term position here, right? Tesla. So Tesla's momentum continued. So if you have long, right, you'll probably sit in the green. But as of now, it looks like it's gonna fade off. Let's see what happens. But I haven't found any good opportunity to enter Tesla. Maybe when it covers the gap here. But let's see. Next week, I'm not really confident in the companies that I picked out technicals wise. So I would like to say that it's okay to do nothing. You don't have to always find a company to invest in or trade into. But let's see. So one of the companies I recommended is UNH. It's still consolidating, that I mentioned earlier. It's showing a fairly good support around these current prices. So I think it's not a bad place to add on to your names, right? Number 2, Celsius. So Celsius has a pretty strong recovery from the lows it's hit over the year. So it popped out, gapped out, and retraced back nicely, and now it's showing a very strong bullish daily close candle of a support level. So if this continues, I think this is a good confirmation candle. You can long and choose to exit near the local resistance peak. So I think this might be something that I might do next week, right? Number 3, Exxon. It's more like a trend rally, pause, rally, play, right? So trend, pause, uptrend, pause, uptrend, pause. So I think this is a good area to just take a long position and hold. It's more like a trend trade. If it retraces back to the previous high, it's a pretty good gain percentage wise. So I wouldn't mind buying this company next week. So I think I will place Exxon number 1 on my preferred list, right? Number 4, Circle, which is a crypto stablecoin company, right? Crypto is interesting. I'll share more a bit later on if you're after I cover technicals. But it looks like if the prices retraces back here and holds, we could go for a long. But as of now, it looks like it's going heading nowhere now. But let's see. Number 5, Okta. So Okta, has been trending and consolidating here. It may build a stronger base to hit back higher, back to its previous high. So this area where it's trading at has historically been like a pretty strong resistance level turn support. So I think it's okay to have a simple support resistance play here, Okta. So I think Okta, I'll place it 3rd, 4th, and 5th. Okay. But like I mentioned, right, these names I don't have that much confidence. Just pure technical trading. It's okay to do nothing. But let's see. So a name that I'm hesitating to bring up is called a BMNR. If you don't know, BMNR is BMNR. Oh, it's not even listed here. BMNR. Well, it's not listed on Stock Penguins, but BMNR is like a sort of like a proxy for Ethereum holding company, right? So all they do is just buy Ethereum and hold it. So that's the current play of the company, right? It's heavily endorsed by Tom Lee, right? It's more like a Ethereum play, a proxy Ethereum play, where you don't have to buy Ethereum directly, but just buy Bitmine. So I'm really hesitating on this name because I'm looking at the chart, right? Bitmine. It's pulled back nicely to a decent level, and if you look further down into crypto, right, I also do look at crypto's overall sentiments, right? So I think the thing that matters most in crypto is your liquidity. So as you can see, last week you're seeing stablecoins go up by 4 billion in terms of market cap. So there's more liquidity coming to the market. At the same time, we look at Ethereum's stablecoin flow. Sorry, the Ethereum's ETF flow. Last week was a week full of outflows, right? Mostly outflows. So I think it is a good opportunity to add into this when you're seeing some form of divergence, right? Where you're seeing outflows in terms of the ETF, but you're seeing stablecoin flows continue to go up. And if you look at Ethereum's prices itself, it's not stock, Ethereum. It's back to previous all-time high level, which forms a pretty decent support level base. So there's already a liquidity grab, right? So all your stops have already been taken out, like I mentioned before in the earlier in this video, where we see a lot of leverage longs get wiped out, and now it's consolidating around these current prices. So I think Ethereum may not be a bad swing trade through BitMine directly. So I think that's another thing that I'm looking to look out for, BitMine. So I think that's all for this week. Overall, I'm feeling a bit neutral actually. Any trades I take will most likely be technical in nature, so I wouldn't expect like me to put like risk a lot of my portfolio, enter like a 25-30% position. I would take all these trades, but not with the extent that I would lose like 20% of my portfolio kind of value, right? So maybe I'm gonna take like 5% risk, a lot higher than your typical forex traders kind of situation. Thankfully, this all helps with like the availability of fractional shares. So let's see. Next week is gonna be a technical trading week for me. Don't see any opportunities to make big convicted bets, and like I mentioned, it's gonna be quite data reliant on jobs. I think the Fed is also keeping a heavy eye lookout for this data as well. So thank you, and may the markets be with you.